Welcome back to Accounting Basics. In this video, we will look at the first step of the accounting cycle, business documents. We will discuss the most commonly used business documents that appear in the Edexcel IGTS Syllabus. Let's begin with the purchase order. A purchase order is a document sent by the buyer to the seller, showing that the buyer wants to purchase goods. It acts as an offer to buy the goods at agreed prices and quantities. However, a purchase order is not recorded in the accounting books because no transaction has taken place yet. Once the purchase order is accepted, the seller prepares an invoice. For examination purposes, the invoice can be referred to in two ways: as a sales invoice and as a purchase invoice. A sales invoice is the copy of the invoice kept by the seller as a record of goods sold. The purchase invoice is the original invoice prepared by the seller and sent to the buyer, and therefore, the same document is called a sales invoice for the seller and a purchase invoice for the buyer, depending on whose books are being recorded. Next is debit note, which is a request from the buyer to the seller indicating that the buyer wants to return certain goods. If the debit note is accepted, the seller prepares a credit note. The value of the returned goods is recorded based on the credit note, not the debit note. The credit note is then issued by the seller and sent to the buyer. The next document is the remittance advice. This document is prepared by a credit customer and sent as a supporting document when making payment. It mentions which transaction the payment relates to. A receipt, on the other hand, is given to a customer who makes immediate payment. It is used for cash transactions, not credit. So receipts is linked to invoices settled immediately, also known as cash transactions, and remittance advice is linked to payments for credit sale. Next is the statement of account, which is sent by the seller to the buyer each month. It shows all goods purchased, payments made, and the total amount owed by the customer at the end of the month. It also serves as a reminder for the customer to settle outstanding balances. A petty cash voucher is for small payments, like office snacks. The employee pays first and then shows the voucher to the petty cashier to get the money back. The last document here is the bank statement, which is prepared by the bank. It shows all the company's bank transactions for the month. Some of these transactions may not be known to the cash book clerk until the bank statement is received. And that's a wrap on common business transactions in the IGCSE syllabus.